Hi everyone. Okay, today I will be talking about the unlocking opportunities in the gold market with Bursa Malaysia FGLD contract. Okay. I'll start with a brief overview of the products offered by BMD. So BMD offers a range of derivatives product for trading, which consists of commodity, equity, and financial derivatives product. So today our focus will be on the gold futures product. Okay, in these slides, we can explore some of the advantages of trading futures. So as we know, one of the main advantage is the ability to leverage, which I will explain further later on. Then the next one will be allows to short the market. Okay, as you know, futures allows you to short the market, unlike the stocks market or physical market. The futures contract allows traders to profit from both the rising and falling of the gold prices. So trader can start to take open position with a short position, even if they don't have any position at all when the gold price is expected to fall, which allows them to potentially profit from the market downturn. Next will be the immediate exposure to the market. So you can trade anytime, anywhere from any online trading platform, from your handphone, from your laptop. Okay, the next one will be no counterparty risk as the payments is guaranteed by the clearing house. The last in this slide is the forward price discovery. So FGLD also allows for price forward discovery in the gold market trade, so that traders can trade up to 12 months ahead of the current spot month. So let's dive into what is this FGLD contracts, what is gold futures. So a little bit of background, FGLD was first launched on October 2013 and its contract specs were revamped and relaunched last year on 19th of September. So this enhanced FGLD contract is a US dollar denominated futures contract and is cash settled in ringgit Malaysia. So it is designed to provide market participants with exposure to the international gold price movements. So in short, this FGLD contract is a contract that trades in USD and settled in ringgit. Okay, let's now dive into the contract specs of FGLD contract. Okay, maybe not everything in the contract specs, as it will be too much info to digest right now. So you can either screenshot or scan the QR code here for the full contract specs. I think the important key takeaways that you need to remember of this contract is that the price is quoted in US dollar per troy ounce and settled in ringgit Malaysia through a cash settlement method. So the contract multiplier is 40 per contract unit. So the contract size is calculated by multiplying the reference price per troy ounce with the contract multiplier. You will see later on how useful is this contract multiplier. Okay, then the final trading day is the last common business day on the spot month in both London and Kuala Lumpur, as the final settlement value is determined by the LBMA gold price AM on the final trading day. Okay, this reference price is used to calculate the final settlement value. Then another thing is that when it comes to price fluctuation, the minimum price fluctuation is USD 10 cent per contract unit, which means that the value per tick is equivalent to 4 ringgit. Okay. So the trading hour from 9 a.m. to 12:30 p.m. for the morning session, afternoon session from 2:30 to 5:30, and the T+1 session from 9 o'clock to 2:30 a.m. Okay. Okay, the contract months available are sports month, the next 3 calendar months, and any even month falling within the 12 months period, right? So as you can see here, here the screenshot of an example of the real-time prices that you can see on any of your online trading platforms. So we have market makers that are quoting more than 80% to 90% of the total trading hours. So you don't need to worry about there's no quotes for you to close your positions or anything. Okay, so now I will talk about the key features and the benefits of trading FGLD contract. So firstly, as you can see, is the low initial margin. You only need 2,400 ringgit to trade one lot of FGLD contract. The spot month spread is 200 ringgit per pair and the back month spread is 150 ringgit per pair. On top of that, BMD is having a fee holiday on the trading and clearing fee, which means that the trading and clearing fee are waived from now until 31st December 2023. But do note that these fees are different from your brokerage fees. Okay. Next is the leverage. So as you can see here, you only need a small amount of money to gain a bigger exposure in FGLD compared to other contracts. Okay, so like I said just now, leverage is the key of futures trading, right? So which means that, for example here, which means trader can only need 2,400 ringgit to gain exposure equivalent to 74,600 worth of gold, right? So margin versus notional value is only 3% compared to other gold futures contracts. Okay, then FGLD uses the LBME Gold Price AM as final settlement. So I'm not sure whether everyone knows what is LBMA, right? So this LBMA price is a daily spot price, which is based on the collective input of the world's largest gold traders, and its price is actually accepted as the benchmark for the global market worldwide. So making it as a credible and trusted reference point for gold futures settlement. So by using this method to standardize the settlement method, FGLD contract becomes more compatible and accessible to a wider range of market participants. So this can increase the liquidity and facilitates for smoother trading. Okay, so it can also reduce the potential of any market manipulation or disputes, so as it can enhance the market stability. Okay, as you can see here, right, since we are using the LBMA AM price for final settlement value, there's no need to refer to the USD MYR exchange rate to calculate the settlement value. You just, for example, for September, right? So the London Gold AM price was 1871.6 per troy ounce. So the final settlement value, you will round it up to the nearest 0.1, which is for this case, it will be the same price, 1871.6. So the final settlement value will be 187.6. You multiply with the multiplier of 40. So the value is 74,864 ringgit. Okay. From here, you can see the correlation between the LBMA, COMEX gold, and FGLD prices. Right, so as you can see, FGLD mirrors the international gold prices that traded in the key markets. So the correlation can provide traders with valuable insights and opportunities to trade. So this improves the market transparency, which can lead to fairer pricing and increase the trading liquidity. Okay, next is I can show you how simple is it to calculate your profit and loss with the presence of a fixed multiplier. Based on this scenario, let's say you expect the price to go up. Okay, so you buy the gold FGLD at 1840.1 and then you sell it off at 1850.5. For this scenario, how do you calculate your profit, right? So you take your selling price of 1850.5, you minus the buying price of 1840.1, then you times the multiplier of 40, which will give you a profit of 416 ringgit. So that's how from the price code of USD, and you settle and you profit it in ringgit. Okay, so the whole P&L is not impacted by the exchange rate of the USD MOR exchange rate throughout the entire fund flow from the trading to clearing. Domestic clients do not have to convert MOR to USD at all. As I mentioned earlier, a future contract allows you to short the market, which means that you can sell first. So same concept to calculate your profit, like the example just now, just take the price difference and multiply by 40. Okay, so here is the trading volume of FGLD for this year. Yes, it's true that the trading volume of FGLD is relatively low, but we are seeing an increasing percentage of market participations from the retail traders. So it is important to remember that the success of a futures contract often takes time to gain traction and build momentum. So it takes time for market participants to become aware of and fully understand the benefit and opportunity to trade our FGLD contract. Okay, and we are actively engaging in marketing and promotional activities through targeted campaigns and educational seminars. So now is the point that I would like to bring up. So I'm trying to introduce to you our FGLD Retail Trading Challenge. So starting next week on Monday, 16 October, until 31st December this year, which is 2.5 month period, you will have the exciting opportunity to compete for gold prizes by trading our FGLD contract. Okay, so we have a total of 10 prizes up for grabs. So the grand prize winner will receive a 20 gram of minted gold bar, while our first runner-up will be rewarded with 10 grams, and our second runner-up will receive 5 grams of the minted gold bar. Additionally, there are 7 consolation prizes of 1 gram of gold minted bar for each winner. The competition is open to all retail participants, excluding those that are under the special program of local participant and Arctic traders. Okay, throughout the challenge, we will closely monitor and track your progress, and we will provide monthly update and ranking of your performance to your brokers. Right. To be eligible to win these prizes, all you need to do is trade a minimum of 120 lots of FGLD during the campaign period, during the 2.5 month period. That's equivalent to like trading just 2 to 3 lots per day in the, how many? 53 trading days of the 2.5 months campaign. You enter 1 lot, you exit 1 lot, is considered as 2 lots already. So it's an achievable goal, and every trade counts towards your chance at winning. The winner will be selected on January next year, and it will be announced somewhere in the February next year. Okay, so mark your calendar and get ready to trade to win these prizes. Okay, so stay tuned for any announcements through your futures broker, as there is no need a separate registration to be in the running to win these prizes. So as long as you trade and you hit the 120 lots during the campaign, you'll be eligible to win, in the running to win these prizes. I wouldn't, okay, these are the importance of gold in the global market. I think this one is simple one, like store of value, safe haven, financial instruments. I wouldn't touch on this because I think our next speaker will be going more in details on this kind of topics. Is included the 5 common factors that influence the gold prices, such as the monetary policy, global economy, geopolitical events, currency movement, and supply and demand. Okay. So, but I do want to touch on this slides, like some of the best practices for traders. So number 1 is conduct thorough research and analysis before you start trading gold futures. Make sure you understand and manage your leverage and margin requirements effectively, so that you can, you can avoid margin call or waste too much of your capital on a position. You need to cultivate a disciplined mindset, includes setting a realistic profit targets and managing your emotions. Okay. Number 4 is utilizing technical analysis tools such as support and resistance, moving average and trend lines, implementing risk management techniques such as make sure you do set a stop loss orders and diversifying your trading positions. And lastly, you can explore various sources of market information, including fundamental analysis, news releases, research reports, and utilize all the charting tools that's available in the market and trading software to enhance your decision making. Okay, here are some of the gold futures resources that you can refer to, especially when you're trading gold futures, right? So one of the page that I would recommend you to visit is the World Gold Council website, where you can get a lot of what research reports, demand and supply data, central bank data, any kind of data. You can have a look at it. Okay, finally, these are the contacts for the commodity derivatives team in Bursa Malaysia. So if you have any questions, feel free to reach out to me or email me. Okay, that's all for my presentation.
Sure.
Thank you.
Thank you so much for sharing, Miss Stephanie. So, for those of you who will want the slide deck, I think Miss Stephanie will be okay to share post our webinar session. So, you can drop an email to us, Kenanga Futures. We'll be okay to share it after this. And for the upcoming Bursas campaign, once we get details, we'll be happy to share it. So that campaign, you can, once you trade 120 lots, you can also be eligible to win a prize from Kenanga Future side as well. So it's a 2-in-1 sort of promotion. You can be part of KF's campaign at the same time, join Bursa's campaign in the F Gold part. Now, without further ado, I'll bring on our next speaker for today, and he's none other than Mr. David Lowe. So Mr. David has been with, has given so many webinars before, and we are happy to welcome him again. Mr. David is currently a full-time trader and a managing partner at Xmodeus Trading Group. He has done extensive research and is well-versed in the commodities and indices market with multiple years of experience. And I don't want to delay any longer. I'll hand the floor over to Mr. David for his presentation tonight.
Thank you, Chirac, and thank you, Stephanie from Bursa, for that wonderful introduction of the FGLD product. She's definitely have covered a lot of details. I'll do some points that on contract specs later, but we're going to talk about a lot, of course, how to identify and trade the next trend in gold, right? So before that, let me share my screen. Okay, let's see whether you see my screen. Chirac, are you seeing my screen?
Not yet, Mr. David.
Not yet, huh? Okay, hold on a second. Let me press the button. Share. Okay, share screen.
Yes, now we do.
Okay. And very warm welcome to everyone who've joined us this evening. We're going to spend the next hour talking about the trading strategies and how to identify and trade the next trend in gold. So this is an interesting topic, and I think gold is something that is very close to all the investors and traders in Malaysia. And it's one of the favorite products and also one of those favorite assets that Malaysians love. Right. This is myself. Okay. Currently, I'm besides being the managing partner of Xmodeus Trading Group, I'm also the managing director of Top Infinity. We are a proprietary trading firm, and we trade all sorts of financial markets. And gold is one of our favorite products of our traders as well. And it's something that because we see a lot of volatility and a lot of movement in gold, so it's one of our favorite products to trade as well. All right, so let's move on. This disclaimer, I think Chirac has already got that disclaimer, so let's move on as well. And this is what we are going to cover this evening, right? We're going to look at what are the current key drivers of gold price trends? Okay, what are the things that you need to be aware of, need to monitor in terms of looking at gold and trading gold? And after that, we'll look at the technical readings, right? So we have some fundamental, what do you call that, news and fundamental, what do you call that, data to look at. And then we'll follow by technical readings. It's very important as well in terms of the technicals to understand trading, the, what do you call that, the price movement, because technicals is one of the tools that a lot of futures traders use to either read the market, okay, or find opportunities to enter and exit. So we'll look at technical readings of the current phase of the gold market. Where is it? Is it on an uptrend, or is it a sideways trend, or is it on a downtrend? So these are the things that we want to look at. The next one is how to spot and trade the trend for the next coming weeks, right? So what's going to be the outlook like in terms of the gold prices in the next couple of weeks? And of course, how do you take advantage of those trends using the FGLD contract, right? So this is what we're gonna share and explore this evening. Okay, so before we get into that, let's have a quick snapshot of how gold is doing compared to the rest of the universe of futures contracts, right? So these are a whole list of the very, very popular futures contracts, okay? And it's ranked by year-to-date performance in terms of up or down, right? So you can see highlighted here, right in the center, gold is like not going anywhere so far, right? So far for the last 10 months, right? Gold has been unable to shine, right? Very lackluster performance, right? This year has been the year for equities, right? So you see things like Nasdaq's up 32% year to date, S&P is up 10%, and even crude oil, okay, over the last couple of weeks have moved. Crude oil was actually in the beginning of the year right at the bottom of the scale here, but the last couple of weeks has gone up tremendously. We saw a huge spike in oil prices, right? So in terms of gold, right, still currently underperforming. So we'll see whether there's an opportunity. Maybe, you know, things that are not performing, or things that which are it's a good time to get in, right? So that's something that we want to look at as well, right? But what is interesting is if you are your eyes are sharp, if you look at right on top, who's the top performer? Okay, someone's been drinking a lot of orange juice, right? Orange juice prices have been this is the most top performing futures contract globally of all the contracts and all the asset classes. Very, very interesting. Sugar and orange juice and cocoa, right? So guys been drinking orange juice, sugar and cocoa, right? This is an interesting fact from this chart. Okay, so let's move on. Okay, so in terms of talking about gold, right, we like to talk about generally about commodities as well, right? So all of you know since last year, especially from the second quarter onwards of 2022, commodities, okay, in general took a dive, right? Really took a beating, right? Coming down to the mid of this year, okay, from something like a bottom right over here. So the question is this where the commodity markets sets the stage to rise from the bottom, right? So if you see this pink line right over here, okay, this is a line which was the peak of the commodity price cycle, okay, and this chart is actually the S&P Goldman Sachs Commodity Index. So it is a basket. It measures a basket of commodities, right, including precious metals, soft commodities, and also energy, right? So it has a large basket of commodities and measures as an index, right? So in 2008, commodities, of course, was in what we call a super cycle, and actually from year 2020 until year 2022, okay, a lot of pundits, a lot of experts were talking about the next super cycle, or are we in the next commodity super cycle? Of course, all went quiet since last year, right? Since the second quarter of last year, everybody went quiet because commodity prices took a big tumble, right? So it almost retrace about 50% of the move from 2020. So now the question is this. Because super cycles usually last between 6 years or more, right? And we are only like, if you take the low here in April of 2020 or May in 2020. We're only like 3 years into it, right? So is there a possible chance, okay, there's still like 3 more years for commodities to come back and make new highs, right? But what it tried to do, as you can see in the green dots over here, 845 was the high, and the last super cycle in 2008 was 888.5. Okay, that was a high. So is there a chance, okay, for commodities to stage another comeback as part of the commodity super cycle? So this is something that a lot of people are looking at. Okay, you also had some of the big investment banks in the US calling that the oil prices are going to spike above 100, right? We saw what do you call that, a huge rise recently, but of course oil took a drop over the last 2 weeks. But then, will the oil prices move above 100 in the next couple of months? So this is something that we want to watch, and this is something that what do you call that, is highly anticipated to see whether commodities will make a comeback. All right. So what are the key fundamental drivers? Okay, in this one page, basically you are seeing all the key drivers of gold price. Okay, number one, of course, is inflation. Okay, the number that's followed very, very closely is the US inflation. Later we'll look at some of those numbers, right? Because inflation is something that will affect the Federal Reserve's policies on interest rates, right? As you can see here, interest rates is one of those key things as well in terms of gold prices. You have, of course, the global economy and whether the global economy is going to go into recession, whether equities are going to take a beating, right? So normally if equity markets were to take a beating, gold has been traditionally in the other way of where money go to, right? And of course, one of the key, very, very key driver is the US dollar, right? The trend of the US dollar, which we will see how it affects gold prices, right? And one very, very important factor that's coming into focus is conflict, okay, geopolitical conflict, right? And the last couple of days, in fact, the last 5 days over the weekend, we saw the Israel-Palestine conflict, right? And you saw gold prices spike over the last couple of days. So gold prices are very sensitive to this page, these factors that you see on this page: conflict, US dollar, interest rates, and also the global economy, especially in a if the global economy is going to go into a recession, right? So let's go in and jump into each of these factors. Right, so the key driver, US dollar exchange rate, okay? And what you see on this page is the dollar index, okay? Basically in blue, right, you can see over here, the blue line is the dollar index, and the orange line is gold prices. And actually, you could see in end of last year, when the US dollars index started to drop, okay, the US dollar started to drop, you could see that the gold prices started to climb. Okay, that's where gold prices climbed to its peak, slightly above 2,000 US dollars per ounce. This is the gold futures, COMEX gold futures price. And in the same way, inversely, the US dollar DXY formed a bottom around the same time as well. But as the US DXY started to climb from July of this year, you could see that gold prices peaked and actually come down. So gold price and the US dollars are inversely related. So if the US dollar is going to continue to strengthen, then it will put pressure on the gold price. So the DXY is something that you want to look at and keep track on. Whatever trends the US dollar index is going, you'll see gold prices go the other way. Right? So a dollar rally in the last couple of months had basically pressured the gold price lower. Okay, US inflation rate. Okay, so in terms of US inflation rate, we spoke about that and how it's going to influence the Federal Reserve in terms of the policy on interest rates. So the current last number that we saw was the annual inflation rate. The latest number was 3.7% in August of 2023. Actually, the inflation, the US inflation rate dropped to a low in June. Okay, there was 3%, and this was a low that then it started to creep up. Okay, so you saw the last two numbers creeping up from the 3% level, right? But the thing about it is the core inflation rate is still what do you call that? Has slowed down a bit, although we have this inflation rate going up, right? So what is the U.S. Federal Reserve going to do with the inflation now creeping up? Okay, it's something that is going to influence the decision of the Fed going forward, right? We had the Fed, of course, staying with the rate, didn't raise any rates in September, but the next meeting in November is the key what do you call that meeting that a lot of players are looking on and also seeing what is the trend of the Fed going in terms of the interest rates. Okay, in terms of the U.S. unemployment rate is another number that the Fed looks at, right? If the numbers, what you see in the numbers currently, the unemployment rate in the U.S. In terms of September was 3.8%, right? Which is remain unchanged from February 2022. So you can see that actually the unemployment rate has gone down, right? And now the last 2 months it's gone back up to 3.88. Okay, well, it's still at the January 2022 levels. Okay, and at this levels, the experts are commenting that basically in terms of the labor market, it still remains tight if compared to historical standards, and which actually gives the Federal Reserve the leeway, to continue to leave the borrowing costs at quite restrictive levels, basically saying that rates may continue to remain high, right? So those are the implication of the U.S. unemployment rate if it continues to be at this level. Okay, what about the U.S. non-farm payrolls? Okay, this is another of those labor numbers, right? And the last number was an increase in terms of the month of September, an increase of about 336,000 in terms of the number, and it went above all the what do you call that, opinions, or all the consensus, right? And basically beat the market forecast. Okay, market was expecting 170,000 non-farm payrolls increase, but then it actually increased by 336. So basically, in terms of the job gains, is the strongest in 8 months, right? And basically, again, signaling that the labor market is, although gradually easing, but still remains very resilient. Okay, despite all the Federal Reserve's efforts in tightening, it still remains very, very strong. Right. So will this again raise the odds for rates hike in November? So this is something that we have to see. Right. But let's look at another key driver, the US interest rates. So as you can see over here, gold price is in the dark blue. Okay, right over here. The 10-year notes, okay, and yields. Okay, right at the bottom you can see the 10-year yields. This is a micro 10-year yields futures is a contract that's actually tradable on CME. But you can see that yields have been going up. So as interest rates go up, it is negative for gold prices, right? You can see the divergence over here, right? So yields going up, okay, 10-year T notes yields going up, and you see gold prices going down. Okay, so this is another key relationship that needs to be monitored in terms of its correlation or its relationship in terms compared to the gold price. Okay, well, in terms of this tool, okay, this is one tool that you want to regularly go in and have a look if you are tracking or monitoring the Federal Reserve interest rates. Okay, this is the CME Fed Watch tool. Okay, and this is a dynamic number, right? So as of 11th October, okay, just a couple of hours ago when I look at it, what it basically says is in the next meeting, okay, the Fed Watch basically talks about what are the odds of the rates going up or staying. So in terms of the current reading is the Fed Watch says that 86.3% chance of the November rates staying. Again, no increase, right? That's what it's saying currently. But this number changes, right? So as it moves nearer to the meeting, you want to check out on what are the traders betting on, what are traders seeing in terms of the target probabilities of the November 1st meeting for the Federal Reserve meeting, right? So it is interesting to go into Fed Watch too, right? Excuse me for that. Go in and have a look, Google that and click on the link, and you will come to this page and you see what are the odds of the Federal Reserve raising interest rates. So in terms of it raising interest rates is 13.7% now, but let's see whether it changes over the next couple of weeks, right? So this is the interesting page that you want to watch. Okay, so let's look at some of the key drivers, which is the global economy. This is the latest report, the IMF Outlook, World Economic Outlook. It was just published yesterday. Basically, in terms of the baseline forecast for global growth, they are saying for 2023 is 3%. Okay, last year was 3.5%. They're looking at it coming in at 3% and continue to go lower in 2024. Okay, so basically what the IMF says is the numbers that we are seeing currently in terms of the IMF is saying that these numbers that we see 3%, 2.9% is well below the historical average since year 2000, right, which averaged about 3.8% a year. Right. So in terms of what's carrying the weight of growth going forward will be actually the developing economies and the emerging markets. Right, over the next couple of years, from this year, we are looking at, if you look at this chart right on the right side, you can see that emerging market economies and developing economies, they're contributing to about 4.1%, 4% over this couple of years. But in terms of the advanced economies, there's a huge shrink in terms of their growth. Right, that is why it's weighted, and we see 2023 and 2024 at 3% and 2.9% growth respectively. Right, so a sharp slowdown in terms of advanced economies. And one of the key themes of the report, okay, you can go to the IMF website and just basically Google the October 2023 World Economic Outlook, and that of course is a very long report. You can go in and slowly read all the factors, right? But one of the key things that it's from this report is the IMF still sees the balance of risk remain tilted downwards. So the risk is still tilted downwards in terms of the global economy, right? Looking at commodity prices becoming more volatile because of climate and also the geopolitical shocks, okay? So increasingly, the IMF is seeing that there may be no possibilities of, if the geopolitical situations, there are so many of these things popping up. Last year, it was the Ukraine and Russian conflict, which is still continuing. And last 5 days, you have the, what do you call that? You have the Israeli and the Palestine conflict, all right? And later we'll see, talk about whether there's anything happening in the Asia zone. So this is something that we're very concerning, right? So in terms of economic activity, their report shows that still fall short of the pre-pandemic path. Okay, so they thought that things could be better, but no, things doesn't look that great, right? There's a wide divergence among the regions in terms of the growth. And China, okay, China being one of the most looked forward economies, but China is not, the growth momentum is actually fading, right? And because they're facing the headwinds from its real estate crisis and weakening confidence. So all this basically saying that it doesn't look that great. Okay, hopefully factors, the risks, okay, do not get worse in terms of geopolitical shocks. Okay, so not so great. But in terms of gold, what does gold react to if times are bad? Okay, so if the global economy is to go into a recession, the thing about gold prices is historically, gold prices have performed well during recessions. Okay, so this is something you note. Okay, this is from 1970 until 2005. You could see the recessionary times in gray. Okay, these are the gray vertical. Basically, gold performed well during those times. Okay, so there's some relationship that you want to look at as well. Okay, in terms of your view of what the gold prices will be doing during the recession. Okay, and these are the two wildcards that need to be looked at. Okay, the China and Russia wildcards. Whatever happens in these two regions or these two countries are going to have or dominate gold prices. Okay, number one is this. Okay, in terms of geopolitical risk, is there going to be a flashpoint in Taiwan? Okay, and if this flashpoint will lead to a military conflict, right? If this happens, or the escalation in war in Ukraine transforming into a regional or global military conflict. Okay, so these two cards, okay, if it plays out, okay, it's going to have a very, very big bearing on gold prices. Okay, because gold prices actually move in terms of the sentiment, right? So if they feel that things are going bad, gold prices normally what do you call that, go up because of that. Okay, so I'll just give you one research chart and all that. Okay, this is a research chart or a research done by Bauer and Lee. Okay, they were looking at this title. They have this paper called Hedging Geopolitical Risk with Precious Metals. And they found out that in terms of geopolitical risk, gold actually reacts what do you call that, or goes up, okay, when reacts to geopolitical tensions and war, okay, because gold is seen as a safe haven, okay, a hedge against geopolitical risk. This is one of the key drivers, okay, besides dollar price, the dollar strength, or the dollar index, and also interest rates. This is one of the biggest factors. Okay, if there's a geopolitical shock, okay, and people seek a safe haven, okay, gold is the most natural thing that investors and traders will go to, right? So instability drives gold prices. Okay, and these researchers has found that gold and silver prices, not only gold but silver, okay, basically precious metals, perform consistently as a strong hedge for normal geopolitical risk, GPR, and a safe haven during extreme periods of geopolitical risk. Okay, so this is something that you want to pay heed on. So if things like the two, what do you call that, wildcards were really to play out, then gold is where a lot of the traders and investors will go to. Okay, so in terms of looking at gold, gold demand and gold supply, okay, does these two factors play a very, very big factor in terms of gold price movement? Okay, of course, there is what do you call that, supporting in terms of prices when gold demand goes up, okay, or gold supply goes down, okay. But let's have a look at this. And as Stephanie has said, the World Gold Council is your go-to what do you call that, website in terms of the data related to gold, and this is from their report as well. This is their second half Q2 report, and basically gold, this is what they say. You can go in and have a look at the latest reports as well. Okay, gold have been in Q2 supported despite the softer central bank demand. Okay, so but of course this report is a bit old, right? It's only until the first half of the year. Okay, so in the first half of the year, basically what has contributed in terms of the gold demand has been jewelry. Okay, jewelry consumption managed a modest improvement. Okay, bar and coin investment, these are investments into coin, about 6%, right? Demand for gold in terms of the technology side remained very soft because in terms of the demand for consumer electronics has not been that great. So demand in terms of that particular sector is a bit weak. Okay, central bank net buying has slowed, but overall in terms of central bank buyers, okay, central bank has been buying actually since last year, okay, and has continued to play a big part in terms of the buying gold in the global market. Okay, so in the first half, central bank demand, okay, actually has been the highest, okay, in their records since year 2000. Okay, so central bank buying has been the big part of in terms of the gold demand over the last 1 year. Okay, let's have a look at this in terms of charts. Okay, you could see at over the last, these are quarter by quarter, over the last 3 quarters, it's a peak and then it's come down. Right, last year, the gold demand actually went up from Q2 onwards. Okay, basically, you can see a big part of this is a central bank. You can see this light purple bar, but it has come off a bit this year. Okay, so the main thing still is jewelry fabrication. Okay, this has been a big part of the gold demand. Okay, let's look at gold supply. Okay, gold supply is not something that goes up and down extremely fast. Okay, it's very gradual, and over the last, you can see since Q2 of 2022, the total supply is about like 1.2 million. Here it's 1.2 million, so it stays pretty stable in terms of the prices. Okay, I mean the gold supply, right? So in terms of H1 this year, gold supply rose by 7%. In fact, mine production actually reached a H1 half year record. Okay, so this is something you can see here. Okay, mine production. Okay, so it's gone up from the previous what do you call that previous years, right? So this is interesting, but gold supply is not something that you keep a tab on because it's basically quite static, right? So it's not going to be a real big factor in terms of the gold price. Most important is what we saw just now: dollar, the interest rates, and the geopolitical situation, right? Okay, so those are the fundamental drivers that you need to be very aware of and monitor because of the very close relationship between the gold prices and all those factors. Now let's go into the technicals now and look at what is the current reading, what is the current technical reading of the market. Okay, so first we'll look at the monthly chart. This is a longer term chart, of course, and we'll try to decipher where the gold price, or which phase of the gold price is currently in terms of the monthly chart. Okay, and we are using a Elliott wave analysis. Okay, Elliott wave, for those who are new, Elliott wave is a theory of how to analyze a trend, or which phase of the trend it is. Elliott wave basically it says that if it's in an uptrend, it will have 5 waves. Okay, as you can see over here, gold since mid of the 2000s has come up. Okay, wave 1, wave 2, gone up tremendously in the years of 2011 and 2012. Okay, come back down and then move up again in 2021 to a new high, and this is what we call the 5th wave. Okay, and what wave is it now? It is now in a wave called the ABC wave. The ABC wave is what we call a corrective wave. Okay, so in terms of the monthly chart, right, you can see gold has been in this consolidation range, okay, since year 2020, right? It's been up and down, right? It's tried this top here. This is a triple top. Okay, this is a very stubborn price level, 2089. Okay, the price of 2089 is something that you want to watch out for, right? Put it into your diary, or put it, any break of this price 2089 then will spell new highs for gold. Okay, but as it is now in the monthly chart, is going through a what we call a sideways correction. Okay, and if it takes out the 2089 price, then we're going to see a new gold highs, or the new prices for gold above that. Okay, but as it is, it's in consolidation. Okay, the range has been trading between 2089 and of course it came down to around the 1600, the 1680 number. Okay, we'll see in the weekly chart. Okay, so this, in terms of the monthly chart, this is something you want to look out for. 2089, anything above is going to be fantastic for the those who are long gold. Okay, but now currently it's still in the ABC corrective wave, right? Okay, what about the weekly chart? What is the weekly chart saying? Okay, basically also saying that it is in a corrective sequence. Okay, suggesting that it's in the wave C sequence. Okay, wave C sequence is the last leg of the corrective wave. Okay, so after the wave C, then you're going to see possibly a new impulse wave or new trend forming. Okay, but these are weekly charts. From the high, the B here, above 2000, and if it's going to drop until 1006, which is where the target is, 1670 is where the target of the C wave is. There's still a lot of movement, and there's still a lot of profits can be made in terms of the bear side. Okay, of course, this is a bearish analysis. If you look at the C sequence is a down wave sequence, right? There's still a lot of what do you call that, movement towards the downside. Okay, but of course, in the longer term, we saw in the monthly chart is in the sideways market. So it's been trading in the range, right? It's been trading in the range of 1680, 1670, right on from here. Okay, even in 2021, it was trading here, went up to 2022, come down again. September, October of 2022, went back up again. So it's been sideways. Okay, basically, if you can draw the two lines, it's been sideways, as you saw in the monthly chart. All right, but then even if it's going to go down to this bottom, there's still something like some $200 movement over here, right? So let's now look at a 2-day chart. Okay, what does the 2-day chart say? So also consistent to that sideways movement, it is on the last wave of the ABC, right? So for the 2-day chart, it's completed. So possibly seeing the last few legs or last few movement in terms of the correction. Now, this last couple of days, you saw the kick up because of the conflict. Okay, so how the conflict is going to pan out, we don't know yet. Okay, but this is of course very supportive for gold prices. So the question is this going to have a temporary go up before it goes down? So this is something that we have to see, right? This what do you call that, bearish divergence over here was marking the end of the wave 5, the 2-day chart. End of the wave 5, which is the last part of the impulsive wave, and going into correction. So the question now is whether this C has ended right here, and with the conflict starting in Israel and Palestine, is this the end of the C wave? Okay, so this is something that we have to monitor over the last over the next 2 to 3 weeks, right? Well, the correction now has taken to 1811. This is actually the projected target zone. It's actually gone down to that particular point, very close to that point already. So, which is the low of the previous wave 4. Now, if this is going to be end, then this could be a start for the next couple of weeks, some upside going for gold. Right. So these are the phases of the gold prices currently. We want to go in and also look at the technical charts for the dollar. Okay, this is a very important thing. Just now we saw the DXY chart. Okay, now in terms of where the dollar index is going in terms of the weekly chart. Okay, the weekly chart is basically showing that it's completed a wave 4. Okay, so what it means is this: after completing wave 4, it will be going on the impulsive wave 5. And impulsive wave 5, according to the theory of Elliott wave, it will surpass wave 3. Okay, so the wave 3 was at slightly above, it's around 115. And if wave 4 has completed, and this was the target zone where it finished, 99 to 102, it finished right at the target zone and bounced up from there, right? It may take some correction right here, but the look how the waves impulse is going is currently in a wave 5 bullish phase. And we are basically seeing from this chart that the US dollar is going to see new highs, all right? So this is the very bullish look in terms of dollar, right? Now, if the dollar is going to go to new highs, then of course it will place a lot of pressure. We saw that the inverse relationship between dollar and gold price. This is if this particular prediction that wave 5 will exceed the wave 3 high, then dollar rally is going to continue to pressure gold prices. What about the 2-day chart? Okay, so in terms of the 2-day chart as well, basically shows that the whole correction for gold has for the DXY, the dollar index, has completed right here. This is the 5th wave, and now it is going up on a new wave. Okay, so this could be wave 1 or wave 3. We don't know yet. It depends on the momentum. Currently, it's still climbing, right? But basically it's saying that it started already on its new impulse wave. So currently the bulls are in control, and we are expected to see dollar continue to be strong. Okay, so in terms of this particular chart, okay, it's basically pointing to a dollar that's going to be very strong over the next couple of months, right? Okay, so that's a look at the dollar. Later, we also will going into some live charts, looking at what are the prices doing now, right? And looking at the shorter term charts for you traders who are trading gold. Okay, what's the outlook for the next couple of days? We'll go into live charts and look at it afterwards, right? So this is the technical view of the gold prices. Now let's go in and see how we can take what are the opportunities available with Bursa Malaysia FGLD, right? So for those of you who are new to futures, I'll just give you a bit of a primer, right? In terms of the futures universe, right? So futures contracts are basically tradable instruments listed on exchange. And in this case, the FGLD is listed on Bursa Malaysia Derivatives. And all futures contracts are based on a underlying asset, right? FGLD is, of course, the underlying asset is gold, right? But futures can be the underlying can be stocks and shares, right? In single stock futures, it can be stock index like our Malaysian KLCI futures. Okay, that's our Malaysian index. It can be precious metals like gold and silver, FGLD being one of that. It can be commodities, right? Crude palm oil, wheat, okay, crude oil, corn, okay, all these agricultural commodities can be also its underlying asset, or it can be financial instruments like interest rates or bonds. Okay, so all these underlying can be a basis for constructing a futures contract. Okay, so in terms of futures trading in a nutshell, okay, as we say, futures contracts are standardized contracts traded on exchanges, right? And all these futures contracts have an underlying. Okay, so you can buy and sell a contract by basically putting up margin with your broker. Okay, so you pay the margin, okay, deposit into your trading account, and then you can start trading via your futures brokers, right? And the key thing about knowing and understanding a futures contract is you need to understand the contract specs, right? You saw just now Stephanie showing you the contract specs for the FGLD contract. Later, we'll just go in and have a look, and I want to highlight a few things about the contract specs to you as well. The contract specs is where it defines all the what is the contract, where is it traded, when are the trading times, how is it traded. Everything is in the contract specs. So it is a very important thing. When you're trading futures, you must know the contract specs. Okay, and these are the 6 great reasons to trade futures now. Okay, number 1, bull or bear markets. Okay, so if you see gold prices coming down, or you feel that C wave is going to continue to come down, then you can go short. You can take advantage and also a profit from a downtrend. Okay, of course, if gold is going to be bullish due to geopolitical risk, then you can buy gold futures and participate in rising gold prices. Okay, now the thing about what you saw just now in terms of leverage, this is the second reason, but it's one of the largest and one of the most important reasons why people trade futures is because of leverage. Okay, so you saw just now at the price, the slides on from Stephanie, we only put 3% of the value in terms of your margin to trade something a larger size. So leverage is the one that actually enhances your returns. Okay, so let's say, for example, if the leverage is say 20 times, for example, right? What this means that every single 1% move in the underlying asset price, there'll be a 20%, 20 times 20% move in your account, right? So that's why leverage is something that a lot of traders in futures look forward to, right? Of course, flexibility. You can trade indices, you can trade commodities. Futures are very, very flexible in that sense, right? You can get exposure in any type of asset class by trading a futures contract, right? Let's say you want to have an opinion. You have an opinion on US interest rates. Okay, you could actually go in and buy a micro yield contract by participating. You feel that it's going to go up, you can buy an interest rate futures contract, right? Same thing for gold, precious metals, and all that, right? And the fourth is volatility, right? There are very strong market trends in different markets, right? If some markets are slower, let's say, for example, if equity markets are slower or equity markets on decline, there are also other contracts that you can trade. Okay, you could actually trade an index on the opposite side, you feel that equity markets are going to weaken, then you could actually short an index market. Okay, you can go short the either the KLCI or one of those international indices as well. Right. So the fifth reason is, of course, protection. These are used by basically the professionals to protect their portfolios. If you are a fund manager or a portfolio manager, you can use futures to protect your portfolio. Right. This is basically hedging. Right. And in terms of the last point, basically futures transaction costs are generally lower than actually buying the cost of buying the actual underlying asset itself, right? So these are the 6 great reasons why you want to trade futures now. Okay, so the power of leverage, I want to emphasize is this, by using 3% of your money, okay, basically what was the margin, okay, of the FGLD, which is 2,400 ringgit, okay, you can participate and move a larger size investment. Okay, so this is why leverage is so powerful. Okay, it makes money work harder for you. Okay, and futures trading typically between 4 to 10 times leverage, sometimes even above 20 times leverage. Okay, this is a very powerful feature. But then I have to remind you, okay, leverage works both ways. Okay, it's a double-edged sword. Okay, so the key to trading futures is to successfully understand leverage, okay, and how to control leverage. Okay, so leverage, if it goes for you, it enhances your returns, but if it moves against you, okay, it's going to also amplify your losses. So the key, okay, is understanding how to manage the risk associated with leverage. Okay, and those who don't understand leverage, a lot of people who come into the futures market and don't understand leverage can suffer some heavy losses as well. Okay, so this is something to keep in mind. Okay, I have a picture over here. Okay, the pros and cons of leverage. Okay, so be very aware. Okay, if you use leverage, okay, use it. Basically, you can control a large asset with a small capital, enhances your return on capital, and of course, the higher the leverage, the more efficient the use of your capital. Okay, professionals. Okay, that's the key word here. Professional recognize how to make advantage or how to take advantage of this tool. So you must, when you trade futures, you must trade like a professional, how to control the risk. Okay, so if you don't know how to use leverage, it can work against you. You can overtrade. You feel, wow, hey, only 2,004 to trade gold, right? Let me trade a lot more contracts. Okay, you can easily overtrade. Okay, and you can take more risk than you can actually afford. So this is something that you need to keep in mind. Number 2, right? If you don't know how to use and you let a leverage work against you, then it can greatly multiply your loss as well, right? And losses can go beyond initial capital. This is something that you need to control. Okay, you need to control this, the negative side of leverage. Okay, so amateur investors who are ignorant, okay, if they don't know how to use leverage, can cause some serious losses, right? So this is something very important in terms of leverage. Be a friend to leverage. Okay, use it what do you call that properly, and don't let leverage work against you. Okay, so it's very important in terms of trading futures. Okay, so in terms of trading futures, there is these 2 terms that the newer traders will need to be aware. Okay, what are longs and shorts? Okay, is a very typical term used in futures trading. Go long is basically buying with the view that the market is going up. Okay, go short is something I think a lot of people are more familiar with. Going short is, of course, selling a contract with the view that the underlying or the futures contract is going to go, the prices are going to go down. Okay, so longs and shorts are these are 2 things that you need to be familiar with if you're new to trading futures. Okay, go long is to buy, go short is to sell. Okay, so this is something you've seen already from Stephanie's slides. Okay, a reminder, the FGLD is actually a US denominated contract, but settled in ringgit. Okay, so this is a very interesting contract in terms of its construct. Okay, there's a technical term for it. Okay, I don't want to confuse you. It's called a quanto contract. That means the quanto contract is basically a contract that trades a different currency from the settled currency, right? So it trades in US dollar but settled in Malaysian ringgit. Okay, so basically what you are seeing here is you're trading the international gold price. Okay, but settled in ringgit. Okay, basically when you look at the chart of gold price, you're looking at a US dollar chart of what gold prices is per ounce. Okay, but then when it translate back, okay, in your account, it is a ringgit contract. Okay, it's very, very interesting, right? So remember, cash settlement in Malaysian ringgit. Okay, and pricing of the FGLD is based actually on the London gold fixed price. Okay, so which is moves in a high correlation with the COMEX gold as well, right? That's why a lot of people look at COMEX gold to trade the FGLD as well. So this is the contract spec. The most important thing to remember here is the contract multiplier, 40 per contract unit. Excuse me. Okay, so one contract unit is per troy ounce, the reference price per troy ounce multiplied by the contract multiplier. Okay, of course, the minimal move is 0.1 of a US dollar. Okay, 10 cents a US dollar, and that is equivalent to 4 ringgit. All right, contract months you've seen already. Trading hours, you know that it trades 9 to 12:30, 2:30 to 5:30, and then these night hours from 21 hours to 2:30 in the morning. This is where you see a lot of movement as well. So the night session can actually be a very active session in terms of the gold prices. Okay, so if you are trading gold, because gold prices move tremendously during the UK US hours. Okay, so this is why you have an opportunity as well during the night hours to trade the Malaysian FGLD. Okay, this is a fantastic time to look at gold prices as well, because the volatility comes in at this particular nighttime during the New York hours. That's where the gold volatility is one of the highest. Okay, this last few things, this I wanted to emphasize. The margins is only 2004. Okay, so we've seen that being spoken just now. Okay, trading example. Okay, this is just a quick one on the calculation, right? So just remember this trading FGLT is 40 times whatever movement, every single dollar movement in the reference price, you must multiply 40 for your P&L. Okay, so suppose in this bullish scenario, gold futures, say you're bullish on gold, right? December gold futures, you can go and buy it, say 1,009, right? And if the prices go to 1950, you've made $50 multiplied by 40. The multiplier is 40, so your gain in terms of ringgit is 2,000 if you make $50 on the gold price. Okay, so if gold prices, of course, you long the market, you bought and the prices go down, then you will make a loss. Okay, so if you bought at 1,009 and now at 1850, of course, you lost 50. Multiplied by 40. Okay, always remember to multiply by 40. Okay, you'll get the P&L. Okay, so in terms of this, it's a $50 multiplied by 40, you get a 2,000 ringgit loss in value if the gold price goes against you. In a bearish scenario, okay, if you short the December gold price at 1,009, and when you short and if the December gold price dropped to 1850, well, you have a profit of $50, again multiplied by 40 to get your actual P&L. Right, so that's 2,000 gain if prices go down to 1850. But of course, if you shorted and gold prices were to go up, then you'll be losing money, right? So if gold prices go to 1950, okay, you have a loss of 50 times multiplied by 40, you get a 2,000 ringgit value loss. Okay, so it's rather easy to actually calculate the P&L. You just need to remember to multiply by 40, right? So that's how you multiply the P&Ls for FGLD. Okay, so let me bring your attention to the COMEX gold price over the last since 2022. Okay, so although we said that the technical charts say that gold prices are in the consolidation range, but the consolidation range is actually very, very large. Okay, so there are tremendous trading range to make a profit from. Okay, so even though it's range trading, you can see from the high here coming down to the bottom, there's some 300 to 400 US dollar move. Okay, so multiplied by 40, you can imagine what move in terms of the movement it can give you, right? But I want to draw you to attention to this bottom here. Okay, this is ATR. What is ATR? ATR is what we call an average true range. It is a indicator. It's a technical indicator, which basically says over a 14-day period, the average true range. Okay, and you can see over here for gold currently is 20 US dollars. Okay, what it means that the high and low on a daily basis is $20. Okay, so what is $20 in terms of movement? In terms of ringgit. So if you 20 multiplied by the multiplier of 40, it's 800. Okay, that means to say that in terms of the movement, there is a possibility if you can catch the high and low range, it's a 800 ringgit possibility on a daily basis, right? So compared to the margin is only 2004, and you have a daily movement that can be plus minus 800 ringgit. So there's a lot of opportunity there, or there's a lot of range there where you actually can make some profit. Okay, if hold a position for like 1-2 days, there's very likelihood there's a what do you call that, a large movement in terms of your account as well. Right, so this is something that you want to see. Although the ATR you can see over here, it is rather low. You know, it's like the beginning of 2022 we saw it at these levels, and now we're back at these levels. Okay, so in terms of that last 1 over year, okay, then we actually been high volatility, right? The daily range could go up to about 35 or sometimes even exceed 40. Right, so in terms of gold, that means that there's tremendous opportunities opportunities for you to make money in terms of the gold range. All right, so it's great for trading. Right, so how to start trading gold futures? Of course, you need to open an account with your licensed futures broker, right? Talk to Kenanga Futures, open an account with them, okay? And then research and learn the various types of strategies, right? So I heard this now from Chirac that they have a one-to-one coaching lessons, okay? That'd be a great way to learn how to trade what different types of strategies when trading gold, right? And then pick your favorite strategy. If you like a certain strategy, maybe, you know, you like a day trading strategy, or you like a swing trading strategy, or you like a position, hold a position, a long-term position kind of thing, right? Find something that's comfortable with you, okay? And then, of course, determine what risk capital you're willing to invest in, okay? Deposit those margins to your broker, and then you can start. Okay, my best advice is for those who are new, start smaller first. Okay, learn how to trade gold futures. Okay, and then slowly grow your portfolio as you become more knowledgeable and more skillful. Okay, with the instrument. Okay, so that's how to start trading gold futures. Okay, I'm going to go into live chart setups now. Let me share live setup with you. Let's go in and look at some of the real-time prices. Okay, while we do that, you can log in to put in your questions. Okay, let's see what questions you have, and we'll answer your questions. Okay, so now this is a chart of a daily. Okay, this is 2-day. Let's look at the hourly. Okay, so hourly. Okay, as we saw over the last couple of days, the prices have going up because of the geopolitical tensions in the Israel and Palestine area, right? So we saw prices actually go up on an hourly basis, okay, since Friday it formed a bottom, right? So of course, because of the weekend tensions and the weekend conflict, there was a gap up, a huge gap up on the first trading day of this week. Okay, that was Monday. Okay, huge gap up. We were trading around the 1848 levels, and it started the week on the 1860 levels, and still continue to climb. Right, there was some profit taking over here over the last hour. You could see that the what do you call that, the trend is up since beginning of this week. Okay, overall before this week, okay, was actually on a downtrend. Okay, so as we see just now in the 2-day chart, okay, we asked this question of whether this wave C is already completed. Okay, so if it is already completed, okay, that means the Friday lows is as good as it gets for the 2-day chart. Then we are going to see a next over the next couple of weeks climb up towards higher levels for gold. All right, so let's look at the daily. Okay, this is the daily. Okay, you saw the gap up. on Monday. This is the gap up. Okay, prices of gold actually ended around the it ended Friday on 1844 1845 levels, and then jumped up over the last 3 trading days, including today. Right, still continue to move up as things are not actually being resolved yet. I don't think that can be resolved in a couple of days. So if the geopolitical tension continue to hit the markets, then the gold prices are going to continue to climb. Okay, so if you're trading on the shorter term basis, okay, looking at say hourly or 30-minute charts, they're looking at the upward bias in terms of gold prices, right? So even on the 15 minutes, right? You can see on 15 minutes, gold can actually be traded on the intraday basis, right? 15 minutes are charts that can be used for intraday trading, right? You can see right here, there are, a very good trend. It went sideways early, of course, it's early in the morning, not so much action. Okay, but once it starts towards the afternoon, you could see gold prices start to move and have volatility, right? That's why I say in the night market, okay, then this was a 20, 30 hours just now, right? You can see large volatility during this time as well. So you can see last night the volatility is actually at night during the US hours. Okay, so during the daytime it's rather flattish. Okay, but of course even sometimes in the Asian hours there's some big movements. Okay, especially over the weekend. Okay, so of course Monday morning was a huge gap up and then it stayed flat, trying to see what was the situation. Okay, and then at night it started to move again, right? So during the night session, you can see a lot of movement. Okay, so this is the hourly chart. Can show you during 19 hours, 20 hours. Okay, this is where the action is, right? The same way right over here as well, and today as well. Okay, so those of you who are trading gold, you want to definitely look at the night session as well. Okay, okay, so this is a live look at the charts in terms of gold. Let me show you a chart of DXY since it's one of those big factors. Okay, US dollar index. Let's have a look at that. Okay, so very interesting. Huh? It moves exactly in opposite direction of gold, right? So as we said just now, if DXY were to go down, gold will go up. Okay, and you can see the evidence here in the chart, right? So as gold goes up, dollar comes down. Okay, so I've come to the end of my presentations. It's time to take some questions. I'll pass it back to Chirag. Chirag, back to you for questions.
Thank you, Mr. David. Thank you for sharing so much with us today. So now we'll move on to the Q&A segment, and we'll be happy. Mr. David will be happy to answer a few questions. There are no right or wrong questions, so feel free to drop in your questions in the chat box. For those of you who are using your phone, I think there will be that question mark sign. Just go in there and ask your questions. Okay, so again, there are no right or wrong questions. Feel free to ask. This is your time. We have, since we still have Mr. David with us here, this is your chance to ask your questions.
Feel free to shoot any questions. I'd love to answer any of your questions. There's one question, eh?
Yeah, there's one question. The first one. So, as a professional trader and prop shop boss, can you please share your honest trading style? Are you a spreader, hedger, scalper, swing trader, and do you use options?
Okay, very, very good question. Okay, we in our firm we use all types of strategies. Okay, so some of our traders, because we trade over such a very wide range of products, right? We have traders who trade spread trading. Okay, we have traders who trade day trading. Okay, myself, I like day trading a lot. My favorite strategy is day trading. There are some of my traders who love swing trading as well. So holding a position for 1 or 2 days. Okay, so it depends on the individual style. Okay, there's no say one style that is particular to say that okay, one style definitely makes more money than the other. Okay, but in terms of each trader psychology, okay, some traders don't like day trading because it what do you call that? It involves a lot of screen time. Okay, so they prefer perhaps swing trades. Okay, they look at slightly longer term charts. Okay, perhaps 4-hour charts. Okay, so 4-hour charts will pan out a trend over the next 2 or 3 days, right? Whereas if you're using a 5-minute chart, then we are talking about a trend over the next 1 hour, right? So depending on your style, okay. Of course, in terms of day trading, it requires you to have a more you need to be more skilled in that sense, because you need to make decisions. Okay, the problem is not in the trends; it's making decisions. Okay, the cutting losses and the taking profits. You need to be good at making decisions. So the challenge of day trading, and there's so many people who actually love trading, but it's actually very challenging in terms of their mental mindset and trading psychology. Okay, so day trading, you can use basically the same indicators that you're using for, say, swing trading or position trading, right? If you are a technical trader. But then what is the difference? The difference is making decision every single minute or every single half an hour. Okay, so that's the difference. Okay, so in terms of which one is more successful, what do I use? Okay, I personally like day trading. Okay, but of course I can swing trade as well, but my most favorite my own favorite style is day trading. Okay, but in terms of the people that we employ and the people that we use, the different types of methods to trade. I hope that answers the question, Jojo.
Yeah, thank you, Mr. David. I think Jojo has a follow-up question that as a day
Ah,
trader, you mean as an outrighter. So
yeah. I mainly trade outrights. Okay, yeah. Some of my other colleagues trade spreads, but myself I trade outright. Okay, let's move on to the next question.
yes. So there's another one that from Bong, that trading nighttime is better in gold futures. Can he say that trading nighttime is better in gold futures?
Okay, all I can say is we saw just now the volatility increases during the night session, because night session, of course, in our session, in our Asian time, the US hours. Okay, so for the US players is their daytime, so that is where the most volatility happens. Okay, that's where you want to trade. The ranges are the movements are largest over there. So if you are trading gold and you're trading, of course, all traders want to trade optimal time, right? For gold trading, yes, of course, you can trade Asian hours, but it'll be smaller ranges, okay, or it can be sideways, okay. So some traders don't like to trade sideways markets; they prefer trendy markets. So they would be trading in terms of your day trading, okay. So what I used to do previously is okay, in terms of trading gold, interesting thing. Of course, a lot of you maybe are not full-time traders, right? You could be holding a full-time job, daytime you may be trading. So actually, gold trading is perfect, because the actual movement itself is actually at night, right? So you could come back from your work, getting your dinner, and then look at your screens for the technical setups, and then trade gold during that sort of what we say the active hour between 8 o'clock to 12 o'clock, okay, or 1 o'clock. Okay, so that's why I personally think that in trading gold, the night hours is where the action is. Okay, and where the action is where you make profits, right? Yeah.
Right.
I hope that answers the question.
Sure. Thank you, Mr. David. And I think there's another one from Ashraf. That could you share how you find entries for day trading?
Okay, that of course is a very to answer that properly. It takes it's gonna take an hour or more to answer that. Okay, so what I suggest, but myself personally, I use breakouts. Okay, I trade breakouts. So
Hi all. Sorry, I think there's a glitch. I think we lost Mr. David for a while. Just give us a couple more minutes. Give us 2 more minutes. We'll try to contact Mr. David. Just apologies for the delay. Give us just a couple more minutes. I think there's some technical issues on Mr. David's side. He should be joining back, and maybe he can just take a couple more questions.
Okay, I hope I'm back, Shirak.
Yes, you are.
Sorry
Mr.
about
David.
that. Yeah, suddenly my camera went off and then we lost you there. Yeah,
Yeah,
where was I? I was halfway through a question.
yeah. It was about on finding. How do you find entries for day trading?
Okay. So I basically start with a chart, either a 15-minute or a 30-minute chart. Okay, because I trade breakouts, I look for the what do you call that? The price action. Okay, basically fractals. Okay, fractals. And for those of you who want to learn, because there's no time to actually teach you in very short time, what you could do is you can check out YouTube videos on the method that I teach. Just Google my name, okay, and Xmodeus, okay, and you can get some of those ideas on how I read the charts to that. So I trade breakouts, but for day trading, it's important to find your time, okay, your timing, right? So whether you're using 15-minute charts or using half an hour charts or hourly charts to trade, okay. For trading Go, it's fine to use half an hour or even hourly charts for day trading. Okay, because it basically trades around the clock. Okay, so my method of finding entries and exits is by using the fractal breakouts. Okay, so check that out. For those who are a fan of Bill Williams, okay, fractal trading, then you can also read his book, Bill Williams Trading Chaos. Those are my favorite methods that I use. Trading Chaos there's a very good book on trading that you want to look out for as well, right? So I apologize because there's not much time to go into a real method, but do check out some of the methods on YouTube.
Sure. And Mr. David, we'll just take one last question for the day.
Mm.
That do you think it's possible to use one single indicator to make consistent returns over time in the market? Let's say the MACD indicator with
Mm.
optimized parameters through backtesting.
Okay, it's certainly possible to do that. In fact, I would encourage most of the traders starting out to not to make your trading style or trading method too complicated. Okay, so complication is more common and more of a problem. Okay, so simplicity is a good thing, right? So if you are using a back-tested system, perhaps even much used and such a popular thing like MACD, okay, with some optimized criteria or parameters, and you find success in that, you certainly can use a single indicator to make money in the market. Okay, so when it comes to trading, keep things simple, right? For me, I don't even use indicators. Okay, I only use price action. Okay, so I basically look at price action and the breakout. I go in with that. Okay, so yes, you could actually have a potentially profitable system, even if it's just one indicator. Okay, what is more important in terms of besides the method is your risk management. Okay, very important. Risk management, money management, and also your trading psychology. Okay, those two things are going to play a larger role. Okay, against a method. Okay, so a method is important, but risk and money management and then trading psychology, those are the other two factors that are very important in terms of a trading strategy. Back to you, Shirak.
Thank you, Mr. David. Actually, there's one last question on the floor. Are you okay to take it?
Sure, please.
Okay,
Love
so
to take it.
this will be the last one. It's from Jojo, and he said that when you trade breakouts, how do you place orders, by limit orders or stop orders?
Okay. Most of the time when I break out is I've already seen the level there, then I'll put a stop order, right, to enter the market. So when it hits the breakout point, it will automatically enter the market for me, right? So I use stop orders to get into the market.
Okay,
I hope that
fair
answers
enough.
the question. Yeah.
Definitely. Thank you, Mr. David.